A rule appears in many investment agreements. Capital will not be fully committed immediately. Investors retain the right to deploy later. The clause is framed as optionality preservation. Funds remain unallocated until later confirmation points. Operators still begin preparing projects. Planning documents appear first. Roadmaps get drafted. Hiring projections are written into internal reports. A dashboard tracks projected deployment capacity, but the capital behind it remains conditional. The investor side monitors several operators simultaneously. Each operator appears in a pipeline report. A review meeting ranks them monthly. No commitment is made yet. Optionality remains open. The rule changes one decision for the operator. A founder must decide whether to begin building capacity now, waiting risks, losing momentum, starting early risks, idle resources. The founder hires 2 engineers anyway. Early preparation improves perceived readiness. The dashboard reflects increasing operational capacity. But capital remains undecided. The investor side keeps watching multiple dashboards. Each dashboard shows partial readiness signals. None require immediate capital release. Optionality expands across several operators simultaneously. A portfolio spreadsheet lists them side by side. Status columns remain yellow. Decision deferred. Operators notice the pattern. Preparation becomes the signal of seriousness. More preparation increases perceived eligibility. More optionality attracts attention. More actors respond the same way. Each operator expands readiness earlier. Hiring plans move forward. Vendor contracts begin negotiation. Cloud capacity is provisioned. Yet funding decisions remain postponed. The resource base grows before capital arrives. A coordination breakdown appears. Investors expect operators to demonstrate readiness before committing funds. Operators expect investors to commit before expanding further capacity. Both sides wait, both sides prepare. Readiness metrics start circulating between them. Pipeline reports grow thicker. Monthly review decks expand. Rows multiply inside the portfolio spreadsheet. Reported readiness climbs steadily. Operational capacity remains uneven. Some teams have hired early staff. Others only drafted hiring plans. Yet the readiness dashboard aggregates them together. Reported capacity rises. Actual capacity remains fragmented. A distortion appears. The system notices only readiness indicators. The first lock happens quietly. Review meetings start referencing readiness metrics directly. Operators with higher preparation scores receive longer evaluation discussions. Preparation becomes the dominant signal. Investment committees rely on the dashboard summary. Optionality spreads across more operators. The portfolio spreadsheet expands again. More candidates enter the pipeline. Each operator tries to stay visible inside the review cycle. Visibility depends on readiness indicators. Preparation accelerates. Hiring expands earlier than before. Infrastructure spending begins sooner, all without confirmed capital. Resource allocation drifts. Idle capacity increases across operators. Yet the dashboard continues showing growth. Preparation becomes defensive behavior. Each operator preserves optionality too. They prepare for several potential investors simultaneously. Multiple pitch decks circulate. Multiple data rooms remain open. Multiple hiring plans stay active. A race emerges. Everyone accumulates optionality. Investors hold capital flexibility. Operators hold readiness flexibility. The preparation layer thickens across the market. More engineers hired earlier. More infrastructure provisioned prematurely. Backlogs appear in operational systems. Idle resources accumulate quietly. Review dashboards still show expanding readiness. Reported progress accelerates. Operational throughput does not. Coordination disappears. Optionality preservation spreads across the industry. Capital commitment becomes slower. Preparation becomes faster. The gap widens every quarter. The system stabilizes around that gap. Preparation metrics begin appearing in hiring discussions. Operators review candidate profiles during weekly hiring calls. A new line enters the evaluation template. Experience preparing for rapid scale. Candidates who built early infrastructure receive higher scores. Those who waited for confirmed capital appear less attractive. Hiring criteria slowly adjust. Recruiters start asking about pre-funding build phases. Job descriptions mention readiness for uncertain capital timing. Operational roles emphasize flexibility before deployment. The preparation stage becomes a career credential. Inside investor review meetings, the same signals circulate. Readiness dashboards summarize hiring velocity. Teams with earlier hiring activity appear more serious. Preparation now signals commitment. Operators notice the pattern again. Internal planning documents begin to codify it. A section appears inside operating playbooks. Prepare infrastructure before capital confirmation. A second section follows. Maintain readiness across multiple investment timelines. Playbooks circulate across operator teams. Operational checklists now include early hiring benchmarks. Infrastructure capacity targets move forward on the calendar. Cloud spending starts earlier in each project timeline. Backlogs accumulate in project tracking tools. Preparation tasks multiply across boards. More rows appear inside sprint trackers. More resources enter standby mode. Idle capacity grows quietly. Still waiting. Investors continue running portfolio reviews monthly. Pipeline dashboards expand again. The spreadsheet columns widen. Each operator reports readiness updates. Yet the oversight team reviewing them does not expand equally. One review group scans dozens of dashboards. Evaluation time per operator shrinks gradually. Oversight capacity stretches thin. Signals must be simplified. The dashboard summary becomes the main reference. Green indicators dominate the screen. Detailed operational variance disappears from view. Information compresses into a few readiness scores. Preparation metrics grow more influential. Teams optimize those indicators further. Hiring begins earlier still. Infrastructure deployment advances even sooner. Scaling amplification appears. Each new operator copies the existing preparation timeline. Templates replicate across the industry. Operational playbooks circulate through shared documents. Preparation windows extend further before capital release. Costs begin shifting across the system. Operators carry early hiring expenses. Infrastructure providers receive earlier payments. Investors retain capital flexibility. The cost redistribution spreads slowly. Balance sheets absorb the early expenses. Quarterly reports still show rising readiness capacity. The distortion deepens. Reported scale grows faster than deployed capital. Time horizon mismatch widens. Operators plan infrastructure for long-term deployment. Investors preserve short-term optionality. Preparation bridges the gap. But the bridge expands every cycle. Pipeline dashboards grow larger each quarter. Review meetings grow shorter. Oversight tools struggle to follow operational details. Information asymmetry thickens between dashboard summaries and actual resource usage. Idle engineering teams appear only as readiness indicators. Unused infrastructure appears as capacity reserves. Preparation looks like growth. For a moment, uncertainty appears. Some investors notice readiness rising faster than deployment, but the dashboard aggregates still show expanding opportunity sets. The signal remains ambiguous. Review cycles continue unchanged. Preparation standards tighten again in operator playbooks. New hiring benchmarks enter planning spreadsheets. Teams begin tracking preparation velocity weekly. Cross-actor feedback loops intensify. Investors prefer operators with advanced readiness dashboards. Operators accelerate readiness to remain visible. More preparation attracts more attention. Attention reinforces preparation. The loop stabilizes. Preparation becomes the industry baseline. Operational cost curves move earlier. Capital deployment curves move later. Both sides maintain optionality simultaneously. The preparation layer thickens across the system. Capacity accumulates quietly behind dashboards. The preparation layer becomes normal operating procedure. Hiring calendars move months earlier than capital decisions. Infrastructure capacity appears before confirmed deployment schedules. Dashboards continue reporting expanding readiness across operators. Investment committees still review the same readiness summaries. Optionality remains preserved on the capital side. Preparation remains necessary on the operator side. Both behaviors continue repeating across review cycles. The gap between readiness and deployment persists. Operational capacity grows faster than capital allocation. Pipeline spreadsheets grow longer each quarter. Oversight time per operator remains limited. Preparation signals dominate evaluation again. More readiness scores appear green. Idle capacity continues accumulating behind those indicators. The system no longer waits for commitment signals. It moves according to preparation signals instead. Preparation becomes the visible currency of the system, not deployment, not execution, preparation. A stable pattern emerges across the market. Investors hold optionality across multiple operators. Operators hold readiness across multiple investors. Both sides accumulate flexibility simultaneously. Neither side commits early. The industry continues operating inside that structure. No single decision created it, no meeting designed it, but the structure now persists because the incentives remain the same.